Welcome back to Your Average Investor. Today we're going to be talking about Jumia, JMIA stock, and whether or not it's a good time to buy. Now, if you're not familiar with Jumia, let me give you a little introduction to the company. Then we're going to go over some technical analysis and fundamental analysis. And as always, please subscribe to the channel. Helps us get this thing monetized so we can do more giveaways. We're going to be doing a $1,000 giveaway once we hit 1,000 subscribers and get monetized. So stay tuned for that. Now, Jumia, what they do is they operate as an e-commerce platform throughout the continent of Africa. And in addition to this, so think about it kind of like Amazon.com, but for Africa. In addition to this, they have some really interesting other offerings, such as Jumia Pay, which is kind of like integrating payment processors for small businesses in Africa, and also a Jumia delivery service. So they're more or less attempting to copy Amazon's playbook, but over in Africa instead of in, well, Amazon's more than North America now, but that's where they started. And you can see here they've got quite a bit of stuff going on their site. It almost gives me more of like a Temu vibe as compared to an Amazon vibe, just with how flashy and colorful it is. But it's not quite as seizure-inducing as Temu is. So overall, that's the basics of what they do. Now let's just take a look quickly at a technical analysis on Jumia, and then we're going to go look at some fundamentals. And I'm going to start by zooming this out to the weekly chart by the 1 year. So this was Jumia's IPO back here in 2019, and right after IPO, they were the love child of the stock market. They jumped from 20 bucks all the way up to $50 real quick before falling back down, and then with the COVID sell-off, cratered all the way down to just over $2 a share. And then with the COVID recovery rally, Jumia went nuts and went from $2 a share up to almost $70 a share before selling off. And since then, it has had a hard time recovering. So some important levels, of course, are going to be this $2.15 level. We're nowhere near that, so it's almost not even worth putting a price line there, but we'll do it anyway. What the heck? And then another important level is going to be this support zone here in this like $6.50–$6 range. It based out here for a little bit and then had another base right here. This is maybe a little higher at the $7 range, but I'm going to put that as a potential support or resistance right around the $6 to $6.50 zone. And then after that, the next major one's going to be back at the IPO price, which is about $19–$20. You can see that it stuttered at that price quite a while after this sell-off. So we're going to add another price line there at around $19–$20 per share. Now, taking a quick pause to look at fundamentals, you can see obviously as a growing and emerging tech/e-commerce company in Africa, they've been operating at a loss. 60-cent loss, 60 cents, 45, 45, 45, 52, 77, and the loss has been widening until these last few quarters it started tightening again, where they got up to only a 36-cent loss per share. And then these last ones, for some reason, it's not displaying. So we'll go look at those later with more of when we get into our fundamental analysis. Now, zooming in more recently, let's just look specifically at the last couple of years. This is what Jumia has been looking at, and it's nice. You can see those two price lines that I added have been acting as a pseudo support and resistance for the last couple of years. You can see anytime it gets down close here to this price, it tends to rally on back up, and then anytime it peaks above here, recently at least, it's been selling off. And that's where I think right now, where Jumia is at, I'm not super comfortable buying at this level, and that's why with the challenge account, I chose to instead sell some cash secured puts, which were up quite nicely on. I noticed that it was coming down on this VWAP bounce here, and I said, hey, if it happens to bounce off of this, that could be a nice play, but also if it cuts through it, the premium gained would give me some nice buffer where even if it dips down to $5 per share, I'm still technically up on the play because I received $57 per contract for the 5.5 contracts. So it is nice to see that our thesis played off here, where it did bounce off of this VWAP catch, and it had a nice, after a stutter day yesterday, nice one day and then a second day continuation on up. What I would like to see to actually enter this with more conviction in shares is something where one of two things happens. One is it continues to move up and then comes back down to this price line or right close to it and then moves up off of it. So I want to see this price line acting as a support instead of a resistance. And that, in my mind, would be a good technical indicator that it's time to start purchasing. Now, if it does cut back below, I think anywhere under a $5 range is a great range to start purchasing. Anything at or under $4, that's where you just buy hand over fist, DCA down. Again, pending any news, this is not financial advice. You've got to do your own research. Maybe something comes out about Jumia tomorrow where it's just a trash company because they've been committing fraud or something. I don't know. But assuming all things remain the same and their fundamentals still continue to improve, anything under $4 is just a bargain steal. The reason that I haven't been scooping it up in these most recent dips is I don't like paying ADR fees. And so what I've been doing instead is on these dips, I've been buying leap calls or selling cash secured puts and just collecting premium off of that. And I think that that's been a pretty good play so far. I've made some solid money off of it. Now, if it does happen to come back down to this $2 range, again, that's a huge buying opportunity in any estimation unless the underlying fundamentals have significantly changed. Now, the second thing from a technical perspective, take a look at this volume. So you can see here for basically an entire year, the volume was pretty low and even got incredibly low during these last several months. And then they had a significant jump on this latest earnings report. And since then, the volume on average has been quite a bit higher, including on this last earnings report where the volume went up again. So it's not just that the price is higher, but the volume is also higher now. So that's a good indicator if you're playing things from a technical perspective. More people are buying in at these prices and liking it here. Of course, for every buyer, there's a seller, but overall, higher volume supports the fact that the price is going to maintain something up in this zone here, maybe this 4 to 6 zone instead of this 2 to 4 zone that it had been trading in, right? Maybe that would be another price line we could add right now. Is this $4 is probably a very strong support zone for the medium term. Now, another technical indicator I'm looking at is this right here. We've got a volume weighted average price anchored to this high. It acted as resistance multiple times. You can see once, twice here, and then it came back up, right? The price came up here, and it looked like it's going to break through, came back down, and we're sitting right there again, right on this volume weighted average price anchored to this high. So for that reason, I'm curious to see if it's going to manage to continue to move on up, or if we see a sell-off and if it cuts through this lower volume weighted average price and potentially moves down back into the $5, $4.50, or $4 zone. Lastly, is you do have a nice series of higher lows happening. If you add a little, let's just add a line like this, you can see we're seeing a lower low here, another lower low here, potentially a lower low here, but again, my guess is it's going to cut back down and come down to this $5 range, potentially down to $4 range again, but I would guess it comes back down to the $5 range soon, and we do have some higher highs being established here, right? So here's a high, obviously this was a higher high. Now this so far has been a lower high, so that could be an interesting indication of, yeah, the rally is not going to be sustained because we have this lower high incoming, and what we may see is we may see the price start to pinch between these two trend lines before a breakout up or a breakout down. Now let's just take a look at their fundamentals real quick, and then we'll call it a day. So fundamental analysis here, let's just take a look. We've got, yikes, they don't have a lot of cash on hand right now. 28 cents per share cash on hand. That's a little bit spooky. Let's just see what that equates out to. If we go 0.28 times, what do they have, 101 million shares. So they've got $28 million in cash on hand, and it looks like they had a loss of $113 million over the last 12 months. Let's go down to their financials here and see what we can find out. So here's 2023, or trailing 12 months. Net income, yep, lost $113 million in the trailing 12 months. 2023 lost $100 million. So that doesn't look too encouraging. They don't have a lot of cash on hand, and they're burning cash pretty fast still, which means they'll likely have to sell shares on the secondary market in order to raise cash, or possibly come up with some other way to raise cash. soon if they're not going to be taking down their expenses. And you can see here as a plus, well, 2022 to 2023, their total revenue declined. That's not a good thing to see, obviously. But in the trailing 12 months, it's gone up back to match this, so that's positive. Gross profit followed pretty well. Let's see. We might have to dig into their actual financials to find out where their expenses are coming from to determine what's actually going on and do they have a realistic path to cutting expenses. Interestingly, there's no chart here for insider buys and sells. So unless I missed it. Nope, I didn't miss it. So somewhere else maybe we'll find it. A little bit of short float here, nothing too crazy. With a lower float, 100 million is not a huge float, and that's a pretty small market cap. This could be a potential short squeeze candidate if the short interest builds. Let's just take a look at investor relations right now. This is a great place to explore if you want to learn more about what Jumia does. You can just read through, all of these different things, and they're basically trying to integrate all the countries in Africa into their platform for buying, paying bills. It's actually quite incredible once you enter the Jumia flywheel. If they can pull it off, it would be an incredible story and an incredible company. Similar ones would be like Mercado Libre, MELI. So these guys is similar but for South America. And you can see here, let's go to like a monthly. So you can see here Mercado Libre, really actually quite similar story to Jumia in terms of nice IPO, big excitement, big sell-off. And then since then, they've managed to continue to grow quite steadily, and even had a peak of nearly $2,000 a share, which they're coming right back up on soon. Very interesting to see if Jumia can pull the same thing off in Africa that these guys did in South America. Let's look at these financials. I want to see the latest financial Q1 earnings presentation. Okay. GMV up 5%, 39% year over year. That's pretty dang significant. So 39% year over year. And typically GMV you want to see year over year because Q4 with Christmas and stuff like that is going to have significantly higher sales than Q1. Revenue up 57% year over year. What's this one? Okay. Loss before income tax. So $40 million loss in a quarter. That's curious. The fact that they only have $26 million cash on hand, then technically in another quarter they'd be gone without raising some money. Liquidity position. Oh, here we go. They have $101 million in liquid cash. Not sure why that wasn't showing on FinViz. FinViz might not have the most up-to-date information. So they've got about a 3-quarter runway there. And you can see here it talks a little bit more about what they do. They've got e-commerce delivery, the marketplace, and then Jumia Pay. It's a really nice flywheel. Jumia Pay transactions up 52%. That's interesting. Fulfillment expense. This is good to see. So their fulfillment expense is going down. Expense per order. Cool. Quarterly active customers. That's interesting. So they grew a little bit, but then Q1, even compared to Q1 of 23, they're down in the number of active customers. Orders are up though, so even though the number of customers is down, at least year over year, the number of orders was up, and GMV was up. So all three of these up: first party, marketplace, and other revenue. Okay. Well, I mean, it looks like they have, here's their guidance. We remain committed to reducing our losses, reduce our cash utilization. We project an increase in both orders and GMV in 2024, excluding potential impact of foreign exchange. All right, so that's pretty, I don't know, I would call that very minimal guidance. It didn't really say much there. Okay. Well, overall, it's interesting. Other than the fact that the number of customers they have went down year over year, or the number of active customers, quarterly active customers, other than that one thing, everything else seems to be going in the right direction for Jumia. So, from a fundamental perspective, I think it's actually not a terrible idea to be buying in right now. It's not my favorite play. Again, I would like it a lot better. Let me go back to Jumia's chart. I would like it a lot better around $5 or $4.50 a share, which is why I opted to sell the cash secured puts rather than buy shares outright. Where am I going here? But if the price comes up and starts respecting this area as a support zone, I think it's not a bad buy. So I may be entering a position even on my, so this is the challenge account, maybe on my long-term account, I'll enter a position as well. Love to know your guys' thoughts. Have you guys studied Jumia at all? Tell me what you think in the comments. And as always, subscribe. We'll catch you next time.